Hello traders, today is the 10th of August 2013 and the time in London is 11:51 a.m. in New York, 6:51 a.m. Happy Saturday to you all. The title of this video is How do the Pro Trade Dow Jones Market Leaders. How do the Pro trade Dow Jones Market Leaders. The Dow Jones Index has 30 components. These are American stocks. You have McDonald's, Caterpillar, IBM, Home Depot, ExxonMobil, Cisco. These stocks are listed on the Dow Jones Index. Like every group, there are leaders. Among these 30 stocks, there are 5 market leaders. The question that we are asking is, how do the pro trade market leaders? When you are trading also sectors, you want to know the market leaders. We are talking about financial instrument, the leading financial instrument. When we are talking about a family, every family have their own common characteristic. The dominant pattern, okay, will be more visible. The dominant character will prevail. The same thing for financial instrument. The dominant financial instrument will prevail. So when we are looking at the 30 stocks that are listed on the Dow 30, we want to know, okay, the leading financial instrument. These are what we call the market leaders. The Dow Jones Index has 5 market leaders. So if you are trading any stock that is listed on the Dow 30, you must know, you must pay attention to these 5 market leaders. This is about the trading triangle. When we are using the trading triangle, we are paying attention first to the market itself, which is the S&P 500. Then we are watching the sector or the group, all right, doesn't matter, the sector, before we are paying attention to the individual financial instrument. Now, there is another triangle within the bigger triangle that we call the inside triangle. We have the economy news, the fundamentals, and the market leaders. Now, I don't want to talk too long about the trading triangle itself, because we are focusing on the heart of the trading triangle. When we are talking about the heart of the trading triangle, we are talking about the leaders, the market leaders, the economy news, and the fundamentals, which can change the dynamics of the market or the dynamics of the technical trading at any point. All right. So, how do the pro trade these market leaders? So, the first thing, they know that the market leaders or the leading financial instrument of the Dow Jones can change the dynamics of Dow Jones. So, for instance, if one of the market leader is becoming very, very bearish, it will weigh, so to speak, it will weigh on Dow Jones. It will pull the Dow Jones down. So, I can give another example. So if you are trading, for instance, the Indian 50 stock, you want to know the market leaders. If 70% of these market leaders are bearish, there is a high chance that the index itself, the Indian 50 index, may become bearish. There's a high chance. Not always. Not always. Remember that. Same thing if you are trading, for instance, the FTSE 100 and the banks. We know that the banks are leading, okay, financial instrument for the FTSE 100. If the banks become very, very bearish in London, the FTSE 100 has a high chance, okay, to be bearish. On the other hand, if the market leaders of NASDAQ 100 are bullish, Google and Apple are very, very bullish, they are likely to drag, okay, to push up the Nasdaq 100. I hope you get the point. So I'm talking when we compare that to the genes. If your family there are dominant genes, it can be a sickness, it can be a physical pattern, all right. It can be a level of intelligence. So the prevailing gene will rule your life, so to speak. So your mother and your father get together. If the dominant gene is coming from your father, you are likely to carry that with you. All right. It's the same thing when we are talking about. I'm not expert in this area. All right. So you may smile about it. We are talking about dominant force. All right. The dominant force will prevail. That's why you have to understand what we are talking about now. We are talking about a principle that the dominant force of a group will prevail. So the group is formed of different elements, but the dominant elements will prevail, will determine where the group is going. So for instance, you going around, you have children, and you know the dominant child, all right? And there is a problem, you want to talk to the dominant child, so to speak, all right? You get the point? Or you want to control a group, all right? You want to talk to the leader first, all right, or the leaders. Once you can control the leading force, you are likely to control, the whole structure or the whole group. Professionals are aware of it, and they use it carefully. Every day before they place a trade, they pay attention to the market leaders. How do they trade, these market leaders? They are paying attention to their key levels, the resistance level, horizontal resistance level, horizontal support level, hidden support and resistance level, hidden trend lines, visible trend line, on the higher time frame, like yearly charts, monthly chart, quarterly chart. They are paying attention to the cycle of these market leaders. They do not stop on the technical alone. They check Google Finance, Yahoo Finance. They check what's happening to caterpillars. These are 5 market leaders. They want to dig in, so to speak. All right. Check their product, their competition. We know this weekend there was some litigation between Apple and Samsung. You understand? And Apple has won. The case in United States. This is just recent news, and this. Will affect Samsung to a certain degree, though myself I support Samsung, all right? I'm a Samsung user. And, we may see how this will affect Apple stock, Apple is a market leader for Nasdaq 100, all right? Let's get started. The first market leader for the Dow 30, that I'm going to talk about today is, I'll bring on now, McDonald's. Everybody go to McDonald's, all right? To eat nice food. So at this time, we are not going to talk about the food that McDonald's is cooking. We will talk about, I'm going to focus on the technical parts of this, discussion. I will not go to the fundamental analysis of McDonald's. I will recommend to traders to go to Google Finance, Yahoo Finance, and to do their own due diligence, all right? So, remember, ladies and gentlemen, professional watching very important level. But here, what I'm going to discuss with you, I'm talking about equilibrium price level for market leaders. These are very, very important. If you know how to determine this equilibrium price level, you are likely to know what is likely to take place. You will understand what is likely to take place. The long-term equilibrium price level for McDonald's that professional traders are watching up to the end of 2013, let's move on very fast, is at 9830, the red line, 9830. This is the equilibrium price level that professionals are watching up to the end of 2013. Now, in theory, priority to bullish signal above, priority to bearish signal below. Now, we do not buy anyhow above, we do not sell anyhow below. I talked about this before in previous video that I titled How do they pro trade indices, how do they pro trade commodity, and I don't want to talk about it this time. I'll just move on very fast, 9830, long-term key level for McDonald's, market leader, the first market leader for Dow Jones. You must know the market leaders. The short-term equilibrium price level, by the way, the equilibrium price level will divide, okay, the price into two zones, all right? The bullish zone above and the bearish zone below. These are very, very important. If the price deviates too far away from the equilibrium price level, the price likely to return back to the equilibrium price level for a while. But sometimes traders get into trouble. So for instance, here we have the short-term equilibrium price level here. The price now away from it. But if, as the price going down, all right, the price going down, if the equilibrium price level also is decreasing at the same time, we have a new equilibrium price level. You understand? But this is the original equilibrium price level. But remember that this is what traders get into trouble. They say return to the mean. Sometimes the price does not return to the mean all the time. It will go away from it and stay away from it. Suppose you were here, the equilibrium price level was here. All right? Now, if as the price going up, okay, the equilibrium price level also is increasing, or the value level, the value price also is increasing, we have a new equilibrium price level. But traders think that, okay, because this was equilibrium price level, the price will definitely return back to the original equilibrium price level. But the equilibrium price level, if you have a new one, the price will prefer to return to the latest equilibrium price level. That's why I say to traders, we have always one long-term equilibrium price level and one short-term equilibrium price level. The green line here is, I can say to traders, is valid for 1 week or maybe 2 weeks, unless next week something has changed big time. But this is usually the short-term equilibrium price level, which I'm showing you here in the green. Is usually it will last for 1 week or 2 weeks, something like that. All right. Okay, so the short-term equilibrium price level that professional watching for McDonald's is at a 9896. Do not forget these two equilibrium price level for McDonald's. If you are trading McDonald's, this is the first market leader. Traders should always okay, use a top-down trading system. Okay, go to the higher time frame, check the bigger picture. This is what we see on the yearly chart. Okay, and know where you are, so you can make excellent trading decisions. All right. Always combine the technical with the fundamental is very important, and apply the trading drill. All right, the setup, the signal, and the entry point, checking the market environment, the risk-reward ratio without discounting other market participants. All right, so you can see that the short-term equilibrium price level is not too far away from the long-term equilibrium price level. This is forming a zone here. The price below the two line, which is right now bearish. But is it bearish? Bearish. If the price bearish, highlight the support level. The price bearish, the price looking for support level. So highlight the support level. There's one here at 9652. To avoid that the video is too long, I'll move on very fast away from McDonald's. That's it for McDonald's. The next market leader for the Dow Jones 30, a Dow Jones index, okay, my favorite, okay, index. In fact, I would like to say to traders that if you are day trading the Dow Jones index and you are having a lot of trouble, as I did myself before, all right, use the Swing 240 day trading system. Swing 240 day trading system. It's a free trading system that we give to all TSTW 24 traders. You may purchase it, but it's not a good deal for you to purchase on its own, but it's up to you. It is very, very powerful. Recently, in fact, a trader was telling me about that, which is great. Caterpillar, next up, the long-term equilibrium price level. I'm a bit excited this morning. Beautiful weather in London. You can understand that. We don't get that all the time in London. So, the equilibrium price level, the long-term equilibrium price level for Caterpillar, take notes, 8952. 8952. All right. Okay. Now, the short-term equilibrium price level for Caterpillar is 8511. 8511. Let's go back again. Okay. This is the long-term equilibrium price level. Okay, this is the short-term equilibrium price level. The green line is 8511. The price now retesting, okay, on a daily chart, the short-term equilibrium price level. Traders should be curious. Don't be afraid of the yearly chart. Go on it, check it, okay. Zoom into different time frame, drop it down to the quarterly chart, analyze this, draw your line, join the tops, all right. Don't be afraid. Sometimes traders forget to join a high with a higher high, like this. You see, here it is, beautiful, isn't it? And then just keep doing that, okay, steadily, okay. Draw common central line goes along the price, very close to the price. Do this kind of thing before you switch to your, okay, your 5 minutes or 3 minutes or 10 minutes. Let's go to my favorite one, my 3 minutes, okay, and then just make your decision. You can see the green line here, okay, even on the 3 minute chart. This is the blue line I just draw down. You can see how some professionals were making a decision around key levels. All right, ladies and gentlemen, this is about how do the pro, okay, trade, okay, a Dow Jones market leader. The second market leaders for Dow Jones is Caterpillar. Okay, first one McDonald's, second one Caterpillar. You want to know, very important, because these market leaders can change the dynamics of Dow Jones, therefore also affect the market itself, which is the S&P 500. You may say to me, George, I live in China, I live in Singapore, I live in Australia, I live in beautiful New Zealand, but this is the same thing. The market is global, and what's this affecting China will affect Japan, will affect the United Kingdom. It's a global financial market. All right, very, very important. The third financial instrument, the third market leader for Dow Jones is IBM, International Business Machines Corporation. IBM, okay? If you use computers, you will know IBM, okay? Professional watching for IBM, two levels. This level here, the long-term equilibrium price level for IBM is 20166. 20166. This long-term key level is valid up to the end of 2013. Priority bullish signal above, priority to bearish signal below. If the price below the long-term equilibrium price level and traders are buying, they need to be very, very careful. So now the price is below the long-term equilibrium price level. If one receives a signal to buy and one wants to buy, one must be very, very careful. You must manage the trade, a bullish trade, carefully if the price is below the long-term equilibrium price level. All right, very important. The price now below the equilibrium price level, the long-term equilibrium price level is in a bearish zone. But we do not just sell it, we want to draw. You see, the price looking for a better support level. That's what's happened in a bullish zone. So we want to know where are the support level. The hidden support level, we will use Fibonacci extensions. We will use also pitchfork tools, okay, all right, to highlight hidden support, resistance, and trend line that professionals are watching in, okay, the bullish zone or in the bearish zone. All right, the price now at a support level right now at 18730. If you decide to buy, or if you are taking a bullish signal below the long-term, okay, equilibrium price level, be very, very, okay, cautious, be defensive, and manage the trade carefully. All right. The short-term equilibrium price level for IBM is at 19409. 19409. When the short-term equilibrium price level is below the long-term equilibrium price level, is bearish too. All right, so be very, very cautious if you are buying. Doesn't mean that it cannot go up. The price now at the support level, you can see, draw your line, your trend line, and use your trading tool. Break above, retest, turn around, break below, retest, turn around, break above, okay, a trend line, a bearish trend line, and display the first higher low, okay, or break above a bearish trend line and retesting the low before the last low. All right? All right? Do not just force it, but check the fundamentals. As I said to traders, do not trade any financial instrument without checking, okay, the fundamental. It's just a gambling, pure gambling. Because if, for instance, there are some, like we have seen for Apple and Samsung, these economy news can change the dynamics of the market, the technical trading, instantly. All right, very, very important. I'm encouraging traders to combine the technical and the fundamental, especially if you are trading stocks. Do not go and buy any stock and hold, or buy put option, call option, without doing a little bit of work, okay? The news that are coming out relating to the market leaders, okay? You can see now, if something has, on Monday, for instance, McDonald's or Caterpillars and IBM are bearish, there is a high chance that this will drag Dow Jones to the downside and also affecting the other components of Dow Jones. So if you are trading in Nikkei 225, you want to know the market leaders of Nikkei 225. If you are trading the Nasdaq 100 or any stock on the Nasdaq 100, you want to know the market leaders. This is about the trading a triangle, ladies and gentlemen. If you go to www.dayprotrader.com, do me a favor, click on Market Watch, and read everything. Here I talk about market leaders, the 7 market leaders that can quickly, okay, change the dynamics of the S&P 500. This is the trading triangle. We have the market, the sector, before the individual financial instrument. Inside the biggest triangle, we have a smaller triangle. This is what I call the heart of the trading triangle. The leaders, the news, and the fundamental. Though professionals are using their trading systems and their trading tool, they are always using that within, okay, the parameters of this trading triangle. They do not want to violate this order, so they can make excellent decisions. So first the trading triangle, then the trading drill. All right, you understand the trading drill that we talked about already. All right, the video is getting a bit too long, okay, and this was not my intention, and my apology to traders. These are the 7 market leaders, okay, talking about American stock. These stocks, okay, wherever you are in the world, whether you are in Nigeria, whether you are in Bangkok, all right, in Yemen, where people are doing all sorts of things right now, all right, but lovely people from Yemen. Right now, you have to see it. These stocks can change the dynamics of any, okay, market, okay, index, all right. Google, Apple are market leaders for the Nasdaq 100. IBM, McDonald's, Caterpillars, ExxonMobil, Boeing's are market leaders for Dow 30, the Dow Jones Index. Coming back again to the IBM, okay, the short-term, okay, equilibrium price level is at a 9, my apology to trader, the short-term equilibrium price level for IBM is at 194.09, 194.09. Price below it, but the price now at a support level. What I want traders to understand is that the equilibrium price level are so important. We want to know where they are. So when we are taking a bullish trade or a bearish trade, we may know that where we are and what is likely to take place. Does not mean by that because when a stock is in a bullish zone, okay, it's 100% a bullish. As I explained to you last weekend, there are what we call the transition zones. I don't want to dwell on this. Let's move on, please. The third market leader for, in fact, I'm now on the fourth because, yes, the third is, let's go to Caterpillars first. For Caterpillars, here it is. The long-term key level, 8952. Short-term key level is 8511. We talked about it already. The fourth market leader is ExxonMobil. All right. Let's bring it on. ExxonMobil. If you are trading ExxonMobil, you should pay attention to crude oil. It's very important. Crude oil. Okay. And the ExxonMobil is a very important market leader. In fact, is one of the best market leader. Okay, so if you are trading crude oil, you are trading even currencies, I recommend to trade that are trading forex to even pay attention to this market leader. All right, professional are watching crude oil. Professional that are trading currencies are watching crude oil. Therefore, they are also watching ExxonMobil, that is very often, okay, mimicking, okay, the crude oil itself. All right, ExxonMobil Corporation. I'm going to tell you the key level. You must pay attention to this one carefully. The long-term equilibrium price level for ExxonMobil is 9173. You have to understand that these are not a thin line; these are zones. So you may hear me later on say 9195 or 9176, 9145. It's a zone. All right. So right here, as you can see, we are now at 9176. This is the long-term equilibrium price level. Note it down. All right, up to the end of 2013, up to the end of this year. Beautifully, you can see that ExxonMobil. My apology to traders, I've said something that I shouldn't say. The green line is the short-term equilibrium price level. I'm getting tired now. The green line is the short-term equilibrium price level at 9176. My apology to traders. The short-term equilibrium price level to ExxonMobil is 9176. The short-term equilibrium price level will last for 1 week or 2 weeks. Sometimes it may go to 3 weeks, but it doesn't stay too long. This is a short-term. Because as the price is going down or up, the short-term equilibrium price level is changing. But the long-term equilibrium price level here will remain in place up to the end of this year, 2013. Now, let's come back to it. The long-term equilibrium price level for ExxonMobil is at 9019. 9019. This is the long-term equilibrium price level, which remain valid up to the end of this year. Ladies and gentlemen, pay attention. ExxonMobil is about to retest, is approaching the long-term equilibrium price level. Traders must pay attention to this stock carefully. Some trader will go and place trade to buy. Some trader will place a trade to sell without any other verification. That's not the right way forward. I encourage traders to do things properly by drawing trend line and to take a valid signal. Okay, the setup, the setup, the validation of the setup. This is a setup now. Validation of the setup. Okay, we are now on a daily chart. Nothing should stop us to push our curiosity to the next level. All right, very, very important. Nothing should stop you. All right, so very, very important. All right, go to the yearly chart. This is the bigger picture. All right, and see what is taking place. The price is at a very important resistance level. You can see that, in fact, if I go back again to this, you can see that the difference between the short-term equilibrium price level and the long-term equilibrium price level is not too big. You can see it's created a zone right here. But right now, the price is approaching the long-term equilibrium price level, and professionals know that. As it's approaching this long-term equilibrium price level, we want to know other key level around that zone. There's one here. All right, there's one around 8809. Sometimes the market may know clearly that this is the equilibrium price level. If the market is going to be bullish, they will push it down a bit to retest whether there are more sellers there. If there are no sellers below the long-term equilibrium price level, the price will return back above it. It's just to retest, to test the low of the key level. Sometimes some trader will place a trade on a dot at the key level, thinking that the price will definitely stop there. The price very often will try to dip below it to see whether there are sellers or buyers there before, if there is a support, the price will return back above it. All right. This is very important. You see here how the price went below and then went up. Very often you see that. And the same thing if it's going to go down, you see the high and the higher high. The high before the higher high is a psychological price level. You just highlight it at this. As it display a new higher high here and return back below the previous high, is becoming bearish. You see here, in fact, it gap down. You see, gap down here. So this is the way you want to trade it. So the long-term equilibrium price level, ladies and gentlemen, 90. Is that what I said to you before? 9019. Call it 1019, 1019, 16, whatever. is a zone, all right, and the short-term equilibrium price level, which will last probably 2 weeks, all right. And you can see here the long-term equilibrium price level, ExxonMobil is approaching in big time, all right. I hope I haven't missed any other market leader. The next market leader for Dow Jones index is Boeing. Okay. Okay, if you fly, you know what is Boeing. Okay. This company, build the planes, that we use to travel around the world, So you see now, so for Boeing is a very important market leader. The short-term equilibrium price level is above the long-term equilibrium price level. In theory, it's bullish, but if you stop like this, because this is set up on a daily chart, if you stop like this, you are likely to see something else. You want to see the bigger picture before you start getting very bullish. The price went above the recent, you can see in May 2013, it went above the long-term equilibrium price level, and then it went above the short-term equilibrium price, the current, because almost every week or every other 2 weeks we have a new short-term equilibrium price level. So, and then it went above the current short-term equilibrium price level, and it's now above it nicely. But if you stop like this, you are likely to make a wrong decision. This is what a lot of swing traders, the mistake that a lot of swing traders are making. They come into the daily chart and they're doing their own thing like this, and this is not the best way forward. All right, you see now, the short-term equilibrium price level for Boeing is at 103.06. 103.06. This is a zone. So if I move it down around 101, 102, here 101.91, but the green line that I'm showing you here is 103.06. all right. This is the short-term equilibrium price level. This level will remain in place for 1 week or 2. All right. The long-term equilibrium price level for Boeing, which we should not forget up to the end of the year 2013, is at 9221. 9221. The price above the short-term and the long-term equilibrium price level. But as you can see, as I draw the blue channel here, the price coming out of the channel. One of the mistakes that traders are making also, as the price break below a trend line, traders forget the horizontal key levels. When the price break below, a trend line, pay attention, because the price break below a trend line, a rising trend line, is bearish. Now, highlight the support level. Same thing if the price break above, a bearish trend line is bullish, all right? So we highlight the resistance levels that are above, because the price is looking down for a better resistance level, all right? If we go to the yearly chart, we can see the bigger picture. We can see that on the yearly chart, right here we have, let's remove some of my line here, This is what we see on the yearly chart. This year has been very bullish for Boeing, all right, very bullish, all right. If you see here, there's a resistance here on this year, the high of this year, the year 2007. This is 2007 candle here. The high is a resistance. If there's a resistance there, and that key level, talking about the critical price level for Boeing, is at 107.83. So the level here, 107.83, is a resistance level that professionals are watching. In fact, the price went above it a bit, 103, 107.83. If you go, for instance, on the 10-minute chart to slow the, you see, I will show you 107.83. I'll go instead to the 15-minute chart. $107.83. This is it. You see here. Can you see how the price went above it, only to come out? You see, for many days, how this level. Let's draw instead, so you can see it also on the chart. It's somewhere here. I'll just put it roughly there, and I will call it turquoise. In turquoise. and I want it to be a 10383. Okay, somewhere there, okay? So you can see how the price, see, this is on the 50-minute chart. It went above it a bit, okay? 10783, 10783, I went too far now. I went too far, 10783, I went too far. Okay, somewhere here, you can see how the price came. Alright, even if you are scalping, you can know the key levels from the yearly chart and use them carefully. So professional knew that. See, it popped out, they sold it down, which means trader placed orders above 107, okay, 83. So coming above it, orders filled to sell, orders filled to sell. If this place is littered with sell orders, the price will have a lot of problem or will take some time to break through the selling zone. All right, this is how you want to trade. All right, so ladies and gentlemen, this is all right, the end of this video about how do the pro trade Dow Jones, okay, and market leaders. The key point trader must understand that the dominant financial instrument will prevail, will influence the index itself. So if you are trading any stocks, not only the index, but other elements of the group, the dominant force will influence, okay, other element of the structure. The Dow Jones index has 30 stocks. If we have 70% of the market leader bearish, we don't want to be very, very bullish if you are trading stocks that are listed on the Dow 30. On the other hand, if more than 70% of the Dow Jones market leaders are bullish, we don't want to be very, very, very bearish when we are trading stocks that are listed on the Dow 30. We want to understand that it's all rotating around the trading triangle, the market, the leaders, the market, the sector, and individual financial instrument, and then, okay, the leaders, the news, and the fundamentals. The leaders, the news, and the fundamental can quickly change the dynamics of the market. So you see a beautiful area wave pattern, or you see a nice stochastic pattern, but the next day they tell you that, this X stock, okay, has missed, okay, the analyst forecast. What's going to happen? There's a high chance that, okay, people may decide to pull their money out of that stock for a while. This is very, very important to understand how the fundamentals and the market leaders, okay, and economy news can change the dynamics of okay, a stock instantly. All right, the market leaders, as we have seen now, are very important. If you want to buy and hold for long term, you want to wait for the market leaders to start first a bullish cycle. That's the best way. That's how the hedge funds are trading. They are waiting for the market leaders to give the signal. And the market leaders will give a leading signal because they will change the dynamics of the market itself. That's why it's so important to know, okay, the market leaders of each sector, each index, okay, each group. I've said enough, ladies and gentlemen, and I hope you have learned something from it. And I will put into use, okay, to make excellent, okay, day trading or swing trading decisions. Until the next time, enjoy yourself and be very happy. We are the GSTWSYS008 traders. Speak to you soon.